Hey guys, how's it going? Before we begin, just another quick plug. If you're not in the Discord server already, this is your last week to get in for free to make sure you check it out before we go fully paid next week. Also, we're making big moves. We've opened up a Twitter page if Twitter is your thing. So it is at Solopreneur ONYT. You can see it right there in the bottom left of your screen. Maybe I'll follow Elon Musk right now. Why not? Hey guys, how's it going? Solo back here with another daily update video. It is end of the market day, Friday afternoon, and it was a overall good trading week for me. Can't complain. So taking a look at the big board here, a lot of green on the board. We ended up very strong this week. Pretty much every ticker on my watch list was green, surprisingly, except for the big tech stocks. So Amazon, Facebook, Google, Apple, Microsoft really weren't moving that much, and that was kind of ominous or a little bit scary because the big tech stocks are pretty much what's been propping this whole market up so far, and everything's been hitting all-time highs. SPY has been hitting all-time highs every day. QQQ has been hitting all-time highs every day. So, is this a sign of things to come? Because personally, I think once big tech falls, I think the rest of the market is going to crumble with it, because that's only the thing that's keeping the whole market propped up right now. So, I was always curious to see what was going to happen when we got near all-time highs, because the market does not really reflect what the overall economy is doing. There's kind of a disconnect here. It doesn't make any sense. I mean, the economy, in my opinion, is not doing well at all. If you follow my Twitter page, you'll see me reposting all these graphs and data that basically prove that the economy is not, doing well like everyone thinks it is. But the market is doing better than it ever has. So at some point, in my opinion, something has to give. But anyway, I also made a kind of a big mistake today. And I basically fat-fingered a play, but we'll get to at the end of the video. Let's just talk about the plays that I had on so far this week. So, as you know, I own 200 shares of Virgin Galactic, and my cost basis is $19 per share without accounting for any premiums that I've collected so far for the past 2 or 3 weeks now along the way. So I had 19 strike covered calls at my cost basis that were expiring today. So unfortunately, I still own these shares because Virgin Galactic, although it rallied green today, it was up a little over 1%. It did not get anywhere close to being $19. So I still own those 200 shares, and I sold 2 covered calls for $13 in premium each. So I collected a free $26 this week on my 2 covered calls, and just reduced my cost basis a little bit. But so actually what I did, instead of letting these options expire worthless today, they were already worth a penny by the afternoon. So what I did was I closed them out, meaning I bought the options back for a penny or $1 per contract. And then I sold, again, 19 strike covered calls for next Friday. And I found that, usually if I wait till Monday morning, at least this past Monday morning, the 19 strike covered calls were trading a little over $20, like $22-ish. So when I looked at the options chain today for the following Friday expiration, the 19 strike covered calls were trading around $30, $31. So I said, you know what, let me buy these options back, close out my position early, and then reopen a trade, basically roll my option out essentially for the following Friday at the same strike price at $19, because I do want my shares to get called away. So I actually got filled on 2 covered calls at $31 each. So my max profit for next week is actually $31 per contract times 2 contracts for Virgin Galactic at my 19 strike cost basis. So that's actually a very good return on my risk, or return on my capital, I should say, regardless of whether my shares get called away or not, because $30 divided by essentially $1,900 in capital that's tied up per contract, that's almost a 1.6% return on my capital, which is very good. So I was actually really happy about that. I mean, if that's the case, then if next Friday Virgin Galactic doesn't get back to 19, then I might do the same thing again, buy these options back for a penny, and hopefully sell another $30 or $31 covered call for the following Friday. I mean, that's a pretty juicy premium, 1.6%. So I'm kind of happy about that. So I'm not too bummed about bag holding shares of Virgin Galactic. I mean, who knows? Let's say Virgin Galactic goes to 20 before Friday. Maybe I'll keep the shares and roll these out to 20 strike cover calls the following week. We'll have to wait and see, but I'm pretty happy with how these trades have been going. I've essentially been wheeling Virgin Galactic so far. I just haven't been able to complete the wheel by having my shares called away. But I'm pretty happy with that. I mean, even with the premium I collected this week, I believe, if I remember correctly, it was $22 per contract that I collected. So I believe I collected $44 total in my two 19 strike covered calls for this week. I'll have to double check that, but I know it was something in the teens or 20s if I remember correctly. And the other play I had open was actually a Tesla spread, which was kind of crazy for me. So I had a spread on Tesla, a put credit spread that was 1880, 1875. So I sold the 1880 put and then I bought the 1875 put to create a credit spread. And for that spread, I actually sold two of them at different times. So the first one I sold for $1.55, so $155 per contract. And then the other spread, which was the identical strikes, I sold for $105 for that contract. So my max profit would have been $260 between those two spreads. And as you can see, Tesla, although it had a red day, it was nowhere near my strikes of 1880 and 1875. So I was able to ride that for max profit, $260 in max profit. And the return on risk was actually insane because since my strikes were 1880 and 1875, they were only $5 width apart. So times 100, because that's $5 per share, times 100 shares per contract, my max loss per contract was $500. And so total, my max loss was $1,000 between those two contracts. So I collected $260 on a risk of $1,000. So that means my return on risk was 26%, which is the highest of any trade I've ever put on so far. So I'm really happy about that. In fact, I'm really happy because I did not sell any cash secured puts this week just because nothing seemed juicy. I couldn't find any juicy premiums. No stocks looked good to me. I couldn't find any good setups. And so I didn't want to force a trade. So I thought, you know what, I was going to be 100% cash gang, or like I said, just sell those Virgin Galactic covered calls. But I'm really happy I stumbled on this Tesla spread because I got $260, which is great for 1 week, especially when it's 26% return on risk. Now, I did end up making one new play today, and I made it completely by accident. And the people that were in Discord during the day know what I'm talking about because I was a little bit freaking out. So what I was doing was I was playing around on my platform, trying to find a good trade. So I was taking a look at, what the return on risk would be, how much buying power they would tie up. And I was looking at QQQ because I couldn't find a good setup on Tesla. Tesla was a little bit too risky for me just because with the split coming up. Same thing with Apple. I didn't want to play Apple because with the split coming up, I didn't know how it was going to play out. I looked at Nvidia, I looked at Microsoft, and I just could not find a good play, a good return on risk, or a good setup. So then I said, let me look at SPY. Again, could not find a good setup. So then I looked at the Qs, QQQ. And so I was looking at the option chain on QQQ because it was green. And I said, well, let me look on the call side because, when a stock goes up, you really don't want to buy a put because you would get more premiums if you buy puts or sell puts when the stock is going down. So QQQ was going up. So I said, let me look into getting a call credit spread. So I looked on the call side and I was messing around with the numbers. So I wanted to, obviously, I need to sell a call and I need to buy a call at a higher strike. So I was looking at QQQ and I said, you know what, let me look at the 300 strike. So I was messing around because QQQ was trading like 291, 292 at the time. So I said, let me look at 300 because it's pretty far out of the money. And I was looking at it, I clicked on it. And then when I was looking at the chain and looking at the values, meaning my buying power reduction, how much my return on risk would be and such, I went to close the box out. And instead of clicking cancel, I clicked confirm. And it got filled immediately because it was at the mid price. So I freaked out because all of a sudden I thought I was clicking cancel. And then all of a sudden it was like, your order has been filled. And so I was like, oh no, what did I just do? And so what happened was I clicked confirm. So I ended up buying a naked call on QQQ at the 300 strike. And I thought, okay, well, don't panic because tech is really big right now. QQQ is all techs. So, and I bought it for the following Friday. Thankfully, it wasn't for today. It was for September 4th expiration, which was like the one saving grace. But I was like, okay, can QQQ go to 300 next week by Friday? you know, it's possible QQQ is made up of Tesla and Apple and all these big tech stocks, and tech's been soaring lately, especially Tesla and Apple, and they got the split coming up, so maybe that's going to give them a nice boost, and then QQQ will get a boost. You know, all these thoughts were running through my head. And then of course, you know, the moment that order filled, my option value just started dropping, right? It was like minus $1, minus $3, minus $5, minus $10, $15. And I was like, oh no, do I just basically cut my losses and just buy it back for a $10, $15, $20 loss? Or do I want to try and risk it and ride this out, and maybe I'll make money off buying a call off QQQ? But then I said, you know what? Let me turn this into a spread. So what I did was then I sold, because I ended up buying the 300 strike call. So now I need to sell the strike that's closer to the money. So I need to sell a strike less than $300. So I said, let me sell the 299 strike. And so that way, by turning it into a spread, my max loss is only the width between the strikes. So it's only $1. So my max loss would only be $100, which is great because I ended up buying the call for $145. So if QQQ didn't go to 300 or above by next Friday, I would have lost, my max loss would have been $145. But by opening up a spread one strike apart, I've now reduced my max loss to only $100, and I put only in quotation marks. But the benefit of making this into a spread was I basically turned this into, I went from a Wall Street bets play and I turned it into a Theta gang play. Because now, initially when I only bought the call, Theta was against me, so time was against me. So every second and every minute of every day that passed, this premium was losing value. However, by making it into a Theta play, now as time passes, I'm making money. So as long as QQQ doesn't go to 299 or higher by end of day Friday, I will collect max profit. And my max profit is not much, but my max profit is actually $19 because I ended up buying the 300 strike for $145, and I actually ended up selling the 299 strike for a little bit of a credit, and the difference of course was $19. So I bought this one for $1.54. I sold this one for $1.73. So my max profit is going to be the difference between the two. So 173 minus 154 is $19. So it's actually not a horrible trade because it's relatively far out of the money. My max profit is $19 on a max loss of $100. So that would be a 19% return on risk, which is not horrible. So I'm actually pretty proud of myself, and thanks to all the people in the Discord server that helped me out with this as well, because I was able to turn a dumb play, right, a fat finger play, into a not so bad play. I mean, if I can collect max profit next Friday for 19% return on risk, that's actually a pretty good play. So yeah, you know, you live and you learn, got to be more careful next time, but that's what I did. I didn't intend to open up a play today, but I did. So that was my trading week for this week. I ended up making profit a little over $260 between my Tesla spread and my space covered calls. Let me know in Discord or in the comments below how you did. Did you open up any new plays today for next week? If you have any questions or comments, as always, leave them below, and happy trading.